Guys, here from OneGlassTrader.com, and welcome back to my Babypips Forex education video series. And as always, if you want to go back and check out any of my other previous Babypips video, just head over to my channel One Glance Trader and hit the playlist section where you can see all the other videos. So we are continuing on with the elementary school. We are in grade 2 talking about Japanese candlesticks, and this particular video talks about dual candlestick patterns. So these are two candlestick patterns, and in this Babypips tutorial they talk about engulfing candles and tweezer bottoms and tweezer tops. So when I was looking through YouTube and coming and thinking about what videos to show that's going to add value to you guys to take you through engulfing candles, I thought what else then better than to choose my own video. So for those of you who follow my stuff, you know I've created an indicator called the OGT Price Action Indicator, which is a suite of candlestick patterns and alerts for MT4. And as part of that package and that indicator, you have engulfing bars or engulfing candles. So I do have a video on this that talks about that element of the indicator, how to use it, what rules I use, etc, etc, and I thought that would probably be the best video because that kind of really covers everything around engulfing candles and the way I like to trade them. So I thought I'll choose my own video. And for tweezer bottoms and tweezer tops, I'll be honest, they're very limited videos on YouTube out there around this particular topic. So the one I did choose only talks about tweezer tops, but I thought it was really good, goes through the definition, what are the criteria for a tweezer top, and then goes through various charts and examples of what it looks like and how potentially to trade them. So again, all the tools and tips and techniques in that particular video can be applied in reverse for tweezer bottoms because the video only talks about tweezer tops. So, you know, really hope you enjoy these two videos. I think it's going to add a lot of value, and sit back and enjoy. Hey guys, Zoe here from OneGlanceTrader.com, and in today's video I'm going to be talking about what makes a significant engulfing candle. Now, I've had a number of people reach out to me asking for more examples of an engulfing bar pattern using the OGT price action indicator, what my settings are, and how would you trade it if a signal comes up. So first and foremost is every time you get a signal from the OGT price action indicator, whether it's a doji pin bar or a engulfing bar, you do not enter straight away on the open of the next bar. There are other things that I like to use, as sure many of you where Confluence and Divergence is probably one of my most favorite tools that I use to confirm trades. So before I go into that and show you this chart that I've got prepared, I'm just going to quickly go through the rules for engulfing pattern, or big shadow as some people like to call it. So the first rule is that the engulfing bar range is within the previous candle. So the low and the high is within, or engulfed rather, in the previous candle. Yeah, so the engulfing bar range is greater than the previous 5 candles. Now, when I talk about significant engulfing candles or bars, I'm talking about the bigger the better, the more likely a reversal is gonna happen. So in the settings of the OGT price action indicator, which I'll go through in a second, you can actually change that. So obviously the more bigger the engulfing bar is than the previous X number of candles, the less signals you're going to get. Obviously, the lower the number, the higher signals you're going to get. So it all really depends. Are you trying to look for those grade A quality trades, or just want to see a lot of signals and then discretionarily make the decision whether or not to enter the trade or not? Because there are times where you put 0 as the previous candle, get loads and loads of signals, and a lot of them do actually turn out to be very good trades. So again, have a play with it, have a look at it and decide what you do, but I normally keep it to the default of 5 candles. The engulfing bar body fills the majority of its range. So as you can see in this bar here of this sell signal, the body covers the majority of the range, and again, the bigger the better. So again, this can also be modified in the indicator settings. So I think the default is set at 70%. That's why I leave it on. Again, the higher the number, the less signals, the lower the number, the more signals. So again, it's up to you. And the reason why I do 70 is because if you left it to 10 or 20% of the range, you're going to start looking at dojis effectively, depending on where they form, because the body is not that big. So or even pin bars even. So again, you want to, engulfing is that body is absolutely huge and fills the majority of the candle. And lastly, engulfing patterns that print in a logical location. Now, I can't really stress this enough. It's probably one of the most important factors is for it to be significant, it's got to print in a logical place. You know, whether it is on a support and resistance line for a potential reversal or a bounce, or it appears within a strong trend for a trend continuation. And we'll look at two of those examples. Well, both those examples rather, in this video. So I hope that makes sense. And now let's get on with the charts. So I've got a USD JPY 5-minute chart on, we'll be looking at the 15th of November. Today is the 17th of November, so only a couple of days ago, trying to keep it as relevant as possible. Now, if we go look at the indicator list of the OGT, again, don't worry about the pin bar and the doji, even though it's set to true. So the engulfing is set to true, so you can show this. And the engulfing setting. So this is why I said the quantity of previous candle range check. So again, I've set that to 5. So the engulfing bar needs to be greater than the previous 5 candles. And the body needs to fill 70% of the range of the candle. So those are the two settings. Left at default. I've not changed anything else. Now, should really mention that if you want to download the OGT price action indicator, the link is actually below, so make sure you go check that out. It's 100% free. So what I'm going to do is I'm going to talk around this one, this one, this one, and this one. These two, not really going to focus on here. So the first three are continuation of trends trades. So the way I like to see it is, you can see we're in an uptrend here, so none of this stuff exists, and the key thing I look at is then divergence. So I like to use the momentum indicator. Again, this can work with stochastics, it can work with RSI. If the stochastics, RSI and momentum are all diverging or converging, either depending on what you're looking at, then again it gives you more confirmation. But I tend to only really look at the momentum indicator for my divergence. So you can see here that, if you look at the two peaks, so this is the first peak there, and the second peak is about, where's it gone? Where's that bar gone? About there. So you can actually see that this is actually diverging the other way. So it's making higher highs on price, and it's making lower highs on the indicator. So for me personally, even though this trade does take off, I personally wouldn't trade this pin bar. So again, just going back to the question and people were asking is, how do I make a decision whether or not to trade it or not? Is personally, I wouldn't trade it, because at this point I would see that information there. So that was that one. Okay, it takes off. I missed the trade, but you're gonna miss trades every now and again. So now we look at this bar over here. Yep. Again, downtrend. We can see now the market has reversed, starting to go down. So it is making lower lows, and at the same time, if I can pick it right, well, even if you pick it here, is again making lower lows. So there is no divergence within price and the indicator. And also price has dropped below the 100 line, which again is showing that momentum is to the downside. So what I would do is set a pending order underneath that. I'll probably give it 2-3 bars. If it doesn't trigger within 2-3 bars, I will cancel the order and leave it, and then you'll have your stop in a logical place up there, 8.5 pips, and you know, a 2-to-1, let's say 16 pips, you make it quite comfortably on this next engulfing bar that comes up there.
Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on the Tweezer Tops Candlesticks pattern. So I'm going to read you the definition of Tweezer Tops, then I'm going to show you several examples on real live charts. So tweezers are a pattern found in technical analysis of options trading or regular trading. I don't know why they have it specifically for options trading. That's interesting. Tweezer patterns occur when two or more candlesticks touch the same bottom for a tweezer bottom pattern or top for a tweezer top pattern. This type of pattern can be with candlestick charts of various types. Breaking down the tweezer. Tweezer bottoms are considered to be short-term bullish reversal patterns. Tops are bearish in either end, means that buyers or sellers were not able to push the top or bottom any further. Both types of patterns require close observation and research in order to be interpreted and used correctly. So I'm going to show you several different examples. If you have ever taken a look at the Candlesticks course, they like to recommend that the first candlestick needs to be a longer bodied, real bodied one, then the second one needs to be short bodied. But you're not going to see, you know, like this doesn't say here on Investopedia. So you got to look at, you know, several different types. Look at basically two highs. You know, a stock makes a high. The next candle can't break that high, so it's a potentially bearish signal. Obviously doesn't mean 100% of the time it's going to reverse, but a lot of times that it does. So I'm going to show you again several examples. So let's go and take a look at Ford. We will go over here, F. You're going to see here, this is a really nice looking one right here. Big green real body right here, forms a top, right? And then you're going to see the second real body here, or the smaller candlestick here. You see, if I do a drawing right across here, if you look, they have the same top. Now, this is where we tell people, don't get bogged down too much in the minutia of things, because sometimes you might get a wick that might be a tiny bit taller than this other one. That doesn't mean it can't be a tweezer top and can't reverse. So it's never going to be like 100% exact. Sometimes you'll see a great pattern like this, but a lot of times it'll be very, very close. Like, give you an example of something like this one right here. I'm not saying this is necessarily a tweezer top pattern, but give you an example. See how this wick right here just gets a tiny bit taller than this one, right? That wouldn't negate, let's say that was like at the top of an uptrend, like up here, right? Let's say if this pattern was up here, that wouldn't negate necessarily it being kind of like a tweezer top or a potential, you know, reversal downwards just because of that. So, you know, keep an eye on it. Again, you're going to see patterns all the time. A lot of times they're going to be very, very similar, but don't discount them because, you know, everything isn't always perfect in the trading world. This is a really nice looking tweezer top right here. But again, we're going to show you several examples here. All right, ABIO. This is almost like utter perfection right here. This is probably about as perfect as you can get, right? Real long body right here. Got the kind of the wick up top, right? Perfectly flat base right at the top. I mean, this is a perfect looking one. Now you're going to see with this chart, this is very interesting. You're going to see like lots of tweezer tops all over the place over here. You know, you can see one. So let me just draw a line here, right? So there's a top right up there, right? Or perfect tweezer top, flat, you know, base up top there. I'm not going to put a ton of drawings on here. Look over here. Here's one right here. Look at this drawing where you can see, boom, look at that. That's a tweezer top right there. Perfect kind of flat top. Stock make too high, you know, this candle right here can't break this high, but this candle is obviously bigger than this candle. Doesn't mean it's not a tweezer top. So it's not, the first candlestick wasn't the long one. The second one was. Again, still a tweezer top, right? So let me just remove this drawing here. Right here, tweezer top. See that right there? This must be like a manipulated stock of some sorts. They're just like, I pulled this up here and you can see just like a bunch of tweezer tops on this chart. I mean, they're all over the place. Look at it, like tweezer bottoms. Like, see this? It's just like, whatever. This is some, I don't even know. I don't know anything about this stock, but it looks kind of garbage. Let's take a look at Netflix over here. You're going to see kind of a smaller one. You know, you can see here the candlestick, I mean, it's still big real body, but not a really big one. But as you can see here, you know, big green candlestick, a smaller one couldn't break. If you look here, I'll pull up my handy drawing tool that I like to use. You can see those two little wicks almost like right at the same peak. Right here, stock's moving up. Couldn't break this previous high, and boom, it fell. Doesn't mean it's always going to fall, but again, you know, they're pretty reliable pattern. So potential reversal top pattern, right?
And there you have it. I really hope you found that useful. I'd be very grateful if you could like, share and comment on this video, and also take the time out just to subscribe to my channel. I really want to try get these educational videos out there to as many traders as possible and really show them the way that they can learn to better themselves in Forex trading and also become a more consistent and profitable trader. And I shall see you on the next video.